Welcome to the Keiser Report. I'm Max Keiser. The tide is going out. The trends are reversing. The sands are shifting. All signs that the four horsemen of the Bondpoclypse are riding into town. And when they arrive, all that you thought you knew to be true will in fact be false. House prices always rise. False. Bonds are safe investments. False. Gold is not money. False. Your toilet will flush when you push the handle. That's completely false. All things that were true are false when the Bondpoclypse arrives. Stacy?
Max, for decades we've lived in a world where bond prices have been rising and commodity prices were declining. However, as the crisis hit once that started to reverse. And we see in all of our headlines today the fundamental nature of all the world around us is changing due to these reverse in trends of prices. Pipe swipers take toilets as U.S. homes with plumbing ebb. Amid the worst recession since the Great Depression, pilfering cut the number of U.S. homes with complete plumbing by about 10.4% from 2008 to 2011, according to a U.S. Census data compiled by Bloomberg. That reversed a 5-decade trend. The decay of housing adds another obstacle to recovery in Rust Belt cities already beset by crime and poverty. So there, Max, are now 3 million homes in America with no plumbing at all. That's about 2.2% of the stock. In some cities like Detroit, 19% of homes have no plumbing, 24% in Gary, Indiana, because it's all been stripped.
But they've got cell phones. No plumbing, no indoor plumbing, but they do have cell phones where they can access virtual games and they can invest in virtual property on Second Life or some virtual environment and use a virtual toilet in virtual space. But the analog space of reality is crashing.
The cause of this is that the metal in a typical urban home is worth $1,000 to $1,500, a fraction of the cost, of course, to repair the damage caused by ripping out the pipes. It'll cost tens of thousands to fix it. And in fact, they interview a woman in Baltimore who had installed in a house that she was renovating a $240 water meter. It was stolen within hours, and the person sold it for $5.
Right. The central planners say that there's not enough gold around to create a gold standard, so we're going to keep flooding the market with paper money. That's driving the cost of metals, copper, zinc, gold, silver, platinum, palladium, to all-time historic highs, forcing people to steal it out of their very plumbing to afford getting a ham sandwich, when all they could simply do to reverse all that was recognize gold as a currency and go back to a gold standard. People would stop selling their plumbing, stop pooping in a bag and throwing it over their neighbor's fence, and they would have an economy based on sound money. But that's not going to happen because that would require the bondholders and the banks to recognize losses on their balance sheet, which means that guys like J.P. Morgan and Lloyd Blankfein and Hester here at RBS here in the UK would have to be recognized as charlatans, as financial wizards. You know, they would have to come to reality, but people would rather stay in a virtual world.
Of course, we've had globalization over the past few decades, thanks to these rising bond prices and falling commodity prices. Now, the other trend has been declining wages. Now, that hasn't reversed, certainly, in America. They are increasing in China and places like that. But part of the reason why many Americans didn't notice their declining wages since 1971, when the U.S. went off the gold standard, is that food prices have continued to fall and fall and fall. So it always made up a lower and lower percentage of the average household expenditure. Now, according to John Gapper at the Financial Times, perils of supermarket cost-cutting machines. The switching of horse meat for beef is a spectacular signal that a limit has been reached. So he talks about the declining prices, that the supermarkets have been good in one way, and we've never quite known what's been in these ready meals. But now he's saying this crisis is showing that we've hit a tipping point. The trend is reversing because this changed in 2007 to 2008. The declining prices with the first of several commodity price shocks. The U.S. use of agricultural products for fuel raised the prices of corn, palm oil, and rapeseed oil, and markets felt the pressure of emerging economies' growing demand for meat. China's per capita consumption of meat has risen fourfold since 1960. So again, trends are reversing, things are changing.
Right. The cost of food was going down along with wages as America was subsidizing the corn industry using paper money and blocking out foreign corn sellers from competing. So it was very anti-competitive. But it's reached a satiation point. They can't subsidize the corn or the cotton any longer, so prices are reversing a 40-year trend. Prices are now starting to move up, but there's no wage increase. So that's the very definition of disenfranchisement or impoverishment. And of course, the food stamp levels have never been higher. Poverty rates have never been higher. People can't afford to buy food anymore. McDonald's just reported that their earnings were suffering because people can't even afford a $1 Happy Meal at McDonald's anymore. That's considered a luxury.
The food stamp usage went from about 11% at the beginning of the crisis and is now at 19.5% in America. So people are relying on food stamps to eat. But the other trend, as you talked about, is the squeezed middle. And this is the other trend that John Gapper in the Financial Times sees, is that the middle has been so squeezed, and you see that in the inequality numbers. 120-something% of all of the wealth created since the crisis began, 120-something% has gone to the top 1%, meaning the bottom 99% have actually lost since the crisis began, and they've gained even more. So this is the other element that he says is in the food supply system, the middle has been squeezed, the most vulnerable. He said the U.S. auto industry once dealt with suppliers in a similar fashion, squeezing them so heavily that the product deteriorated and the makers went bust. Tricky though it is to forge relationships with suppliers in a world where customers demand low prices, the food industry does not have a good alternative. So again, we've squeezed the middle, we've squeezed the incomes, but that's what the oligarchs have been left with now. So America is a clapped out country. It has, it's a disaster zone because the middle has been so squeezed. And yeah, sure, the top 1% have some money and they have indoor plumbing. But the rest of it is not producing any wealth for anybody.
Right, because the average person has been demanding lower prices instead of higher wages. But now it's too late. Those wages are never coming back. Jobs are being replaced by machines and robots. There is no job replacement that's ever going to come back. And meanwhile, the banks are continuing to pay themselves huge bonuses by engineering things like the merger of U.S. Airlines and American Airlines. All this will do is create a non-competitive airline behemoth, which will mean prices go up. Again, but the bankers will make a lot of money. It destroys competition. And once again, they get paid. The Justice Department, the anti-monopoly department, whoever's in charge of that these days, should not allow something like that to go through because it destroys competition, destroys the economy, makes it less safe. Without competition, safety standards go down. So there'll be more plane crashes. But people don't care about that anymore. They usually watch them on TV for amusement.
Well, he notes here in this article, John Gapper does on the Financial Times, that the same situation has happened to the food industry. There used to be mom and pop shops all over the place, little fruit and veg markets all over the place, and now there's just a few behemoths of food delivery mechanisms. Their profit margin has maintained throughout this crisis.
Right, there's no competition.
Yes, there's no competition where it has come, because we know costs have come up and people are able to afford less. We know they've had to cut prices. Where it's come from is the farmer because, quote, the farmer is a price taker with little power in the market. There is a limit to how far you can get by squeezing suppliers time and time again, says Justin Sherrod, a global strategist at Rabobank, who believes that food suppliers need to have stronger links. Like in Asia, like in Japan, he says that the food supply system is a lot different from what here, where the middle is squeezed and squeezed, the farmer is squeezed to death.
But the mythology of the farmer persists in America. During the Super Bowl, the annual big football match, they had an advertisement that featured, and God created the farmer on the 7th or 8th day, and they were celebrating the farmer in America. What they failed to mention is that on the day after, God created genetically modified seeds at Monsanto, and farmers around the world are committing suicide. I think that's what they should have mentioned. Indian farmers and American farmers slitting their throats because of Monsanto, a patent terrorist. Entered into the food chain, monetizing seeds in a way that has created poverty and obesity and corn being injected into products like Coca-Cola. So you have this woman who drank Coca-Cola to death, and now Coca-Cola is being held partially liable for that death, and rightfully so, because they're part of a concerted effort by the corporations and bankers to create basically a holocaust of the consumer.
So what is underlying all of this, of course, the most important ingredient in all of it is the bond prices and the yields. We saw last week bond prices in the UK fell by 4% in one day.
Yeah, as I predicted on this show.
Yeah, so yields are going to go up, and this is when people are still holding on.
Well, they're holding on to their tracker rates on their mortgages, which are now going up, so they'll be homeless.
They're holding on to their tracker rates. They're holding on to their delusions, which are far more important. Those are much, much, much more dangerous to the global economy and to your survival, is that if you hold on to those illusions for a little bit too long, if you don't have gold or silver, for example, because you're holding on to this illusion that Ben Bernanke's trillion-dollar coins might one day rescue you, and so you can go back to how it used to be, and when all those goods at Tesco and supermarkets across the world were going down, that would be fine. But Feds, Stein, banks could be smacked by a bursting bond bubble. Banks could be walloped by a bursting bond bubble, cautions Federal Reserve Governor Jeremy Stein. Banks, Stein warned in a recent speech in St. Louis, may be especially at risk from losses because they typically hold a higher portion of long-term bonds, which suffer the most when interest rates rise.
The bond apocalypse is similar to what happens when you throw a rock into a house of mirrors. And what I mean by this is that all the banks are rehypothecating bonds with each other to finance the creation of new bonds that are sold to another bank that's rehypothecated that bond to be sold to a third bank and a fourth bank ad infinitum. It's daisy chain of fraud with HSBC, Barclays, RBS, Lloyds, JP Morgan, Goldman Sachs, BNP. They're part of a daisy chain of fraud, a house of mirrors of rehypothecation where there is no collateral buttressing any of these bonds whatsoever. They hold on their books for 100 cents on the dollar. They're worth 0 cents on the dollar. The bondpocalypse is upon us. These bonds are going to be marked down to zero, not by government edict, which should be the case if there was a functioning government, it represents government, but by the bondpocalypse, which means that suddenly the shot is fired. I predict that once China, or I should say James Rickards predicts, once China announces that they have 4,000 tons of gold and they are talking about a gold-backed renminbi, this will be the trigger that starts the cascade of bondpocalypse, resulting in interest rates in the UK and US around the world going up 3, 4, 5, 6% in a week. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half. I'll be speaking to former energy regulator Chris Cook. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to former energy market regulator Chris Cook. Chris Cook, welcome to the Keiser Report.
Hello, Max. Good to meet you again.
All right. Well, Chris Cook, you have written something for Asia Times called Gas Diplomacy Time for Iran. Tell us about it.
Right. Well, gas diplomacy is, in my view, we've gone quite far enough with dollar diplomacy. I think it's time for energy diplomacy generally and gas diplomacy.
What is dollar diplomacy?
Dollar diplomacy has also been called dollar hegemony, I suppose. Basically, the American might is right.
Right, so the American empire is based on the dollar. Not so much, people don't understand that America has an empire. Matter of fact, they resist the label. They say, we don't have an empire. We're just minding our own business over here and in between Mexico and Canada. But the dollar, the de facto global world reserve currency in places like Iran and elsewhere, has been really the means for imperialism. Yes?
Yep, absolutely. Michael Hudson writes well on this subject. He wrote about dollar hegemony, and that's precisely what we've got. The petrodollar, the deal between the Saudis and the US going way, way back was, we keep you in power, say the US, we buy your dollar debt, say the Saudis.
Okay, so let's get back to going from a dollar standard to gas diplomacy in Iran.
Yeah.
So we moved from dollar to gas, so now talk about how this gas diplomacy works.
Right, well, where this comes from is the thought that basically energy is neutral. It's if you go back to the Cold War, the Russians were reliably supplying gas into Western Europe right through the Cold War, and the West were paying for it. No matter that there were proxy wars going on all over the world, that was the deal. Also, you had, at the worst time, when Khomeini was in power from 1979, 1993, what were the Iranians doing? They were selling oil to Israel via Mark Rich. I'm saying that energy actually transcends all ideology. That has been the case, and I think in the future there is a solution to be found to the current problems by, let's call it, energy cooperation. People, you know, even the lions and the gazelles, when they go down to the water hole, you know, they don't kill each other at that point. To me, energy is the modern water hole.
Okay, when you talk about gas diplomacy, and we're talking about dollar diplomacy, but it's not about, I think it's important to make a distinction here between oil diplomacy and gas diplomacy. So gas, you know, you have a few spheres of influence for gas. You have Russia, you have Iran, you have Qatar. Those are big three gas players in the world. So you're saying that at this time, what about the embargo happening in Iran? I mean, they have this huge embargo, but how does that factor into this gas diplomacy?
Well, in my view, gas is the new oil. I talk about transition through gas. If you like, the possibility of a new framework for energy pricing, a new framework for energy cooperation, more to the point. Because I think what's needed, and I was at a conference recently, quite an interesting one with people like Richard Pearl and John Hanna, not exactly, you know, quite hawkish. And they were saying, look, there needs to be some new elements in the negotiations. We can't just keep offering the Iranians some spare parts for their Boeings. That isn't going to cut it in the negotiations.
Right. Now, you told us here on the Keiser Report, you were talking about inflation in Iran. The price of chicken had doubled in a week that you were there.
Yes.
And the rial is really in hyperinflation almost. I mean, it's collapsing. And again, these are tremendous pressure being borne on Iran, presumably because of the standoff with the other, their Mideast player, Israel. So you're suggesting that this gas diplomacy is somehow going to usurp this tension between these two, that economics will trump what's going on there. It's all just rhetoric. You know, how does this play out? I'm hearing two different things here.
Well, it's got worse since I was there. It's gone over 40,000. It was a mere 30-something thousand rials to the dollar.
So Iran is being squeezed to death. So how is that diplomatic? Well, like if I put my boot on your throat, that's not diplomacy.
To some extent, they're their own worst enemy, because they are, you know, the problem they got with they subsidise oil and gas and products and energy to a massive extent, and they do it by printing rials. I'm saying that maybe there's another way of doing this, that maybe they could put the price, the domestic price, up to the global price, not just of gas, but of, you know, any carbon fuel, and then compensate the population with units or prepaid units redeemable in payment or returnable in payment for gas. In other words, they could monetize gas, because that is the basis of their currency. Well, gas and oil.
Well, in other Mideast countries, they just give people an annual stipend, annual income based on energy. Same thing as Alaska. Yeah,
but they pay it, Max, in fiat currency. This is my point. I'm saying a currency needs a backing. Gold is one backing. I believe energy is another. I think that gold is a very useful backing for what I call the clearing of credit, the credit clearing. When it comes to long-term investment, it's not, I think gold doesn't work so well, because essentially what you're doing is you're burying the gold under the ground for the period of the loan, you know. All
right, so this whole premise of this discussion is it needs to be upgraded some. This isn't about gas diplomacy. This is about a gas-backed currency, is what we're saying, which will lead to more diplomatic relations.
Well, there's a bigger picture to even that. Yeah, yes, I advocate a gas currency. Absolutely, I think that will be the global reserve currency of the future. If you were the
well, that's a remarkable statement, because no one else is saying this. Now, you're a designer of exchanges. You're a former regulator. You're an insider. Yeah. And you think this is doable, and you think it's preferable?
It's completely doable. I mean, if you're the Chinese and you get the choice between units redeemable in payment for another piece of paper and units redeemable in payment for something that you use, like gas, what are you going to go for? I think the Chinese would fall over themselves, the Japanese would fall over themselves for, you know, a gas currency as opposed to, you know, more dollars.
Well, the Russians are going to love this idea.
it means that,
right?
yeah,
I mean, they're a huge
absolutely.
gas player. They're going to love this idea. Why is Russia buying so much gold? They're the biggest gold buyer in the world right now.
Well,
they say the fiat money system, and I paraphrase here, sucks.
Well, they're buying gold in preference to dollars, and I can't say I blame them. The Iranians are being paid in gold, and I can't say I blame them either, because what choice have they got?
So all these routes through gas, through oil, through gold, all of them suggest that the U.S. dollar as global reserve currency is heading to its endgame.
Yeah, but what's the alternative?
You're just talking about it.
But that's what I believe, but as you say, I'm the first one to say it, Max.
Right, but how close are we now to this? Because the debts that are based in dollars are not being paid, and whether it's austerity in the UK to promote growth or printing up food stamps in America to promote growth, neither is able to offset the liabilities of having so much debt, and we're heading into a debt or a bond collapse, bond bubble. Even the smartest money managers in the world now are shorting bonds as far as getting ready for this bond burst. So the dollar, whether it's politically managed away to something else or whether a collapse comes, we're heading to a post-dollar world. I
agree with that. There will be a post-dollar world, but I mean, don't forget there's two things. There's one is the dollar as currency, and there's the other, which is a dollar as unit of account, because you can exchange things by reference to the dollar, even if you don't settle in the dollar. And that's what I could see happening if as I point out, well, maybe a gas currency would work, maybe a gold currency would work. Many possible currencies, Max, and they depend upon people's accepting them, you know? The basis of a currency is its acceptance by the user.
Yeah, but the thing with the dollar, as we saw in Iraq, is if Saddam Hussein wants to start trading oil in euros, he gets blown up. If Libya just starts talking about a pan-African currency backed by gold, then he ends up getting, murdered. In Afghanistan and around the region, and if Iran starts talking about oil and trading in something other than dollars, there's a sanction going on there.
I'm sorry, Max. I have to interject at that point and say, well, hang on a minute. It's not what you trade it in, it's what you do with the proceeds. That was the deal with the Saudis. The Saudis said, yep, we'll price it in dollars and we'll use the dollars to actually buy bonds or whatever it is. But, if you trade
but the credit facilities that go along with lending all this money to do development and to trade oil and gas and in the energy industry makes J.P. Morgan and Goldman Sachs and Wall Street fabulously wealthy. And that, the credit side of the business, not start extinguishing their bills of receipt, is what makes these guys wealthy. And that they're backed by the Pentagon. They're backed by jets and bombs. They'll come into your country and blow you up.
I'm not arguing with that, Max. I'm just saying that, you can price in euros and in a millisecond you've got dollars, or you can price in dollars and in a millisecond you've got euros. What matters is not what you price in, but where the proceeds go. That's my point.
Okay, well, we disagree, because I would say what matters is your ability to float lots of credit and make a rent-seeking play on the global economy. That's what the American dollar imperium is all about.
I'm not disagreeing with that. I'm just saying that the unit of account and the unit of currency and borrowing are two different things.
All right, let's talk about Venezuela. It has recently devalued its currency by over 30%. Saudi Arabia has slashed oil production by 800,000 barrels a day. What's going on with these two oil producers? Does it have anything to do with declining energy imports into America? There's quite a lot going on in that question.
There is. Well, the Saudis have been shipping oil to the US, for instance, but in my view, that has to do with the if you like, prepay contracts that they were involved with. There's no reason other than predetermined contracts why the Saudi oil should have gone to the US. It would have been better off going east. Venezuela, well, I mean, they had a big refinery which they shut down, Hovensa, in the Virgin Islands. I mean, I don't want to get into all the refinery mechanics, but the essentially cheap oil, really cheap oil, in Canada and in the Bakken, or the shale oil that's been produced, that is really cheap. Can't be shipped out to the middle of the US. The refiners inland, Max, are making money like it's going out of fashion because they've got cheap oil, but the petrol is being priced as though it's coming from Brent. They're making out like bandits on that. But what happens is that the Venezuelans haven't been able to sell as much to the US as they used to, hence the Hovensa refiner shut. So they're getting into bed with the Chinese big time, but the Chinese don't pay. quite so well.
What about the devaluation in Venezuela, though? Now you have like Colgate Palmolive that does business there. You just said we're going to lose $120 million. So this has ripple effects throughout the world, and this is people are devaluing now. This seems to be back in the fore. And what's the trend?
Well, I think the deal in Venezuela, Max, is that basically Chavez has been paying money big time, spending money big time. All of that oil wealth that's been coming in is being spent. It's not like the Norwegians who save it. You know, it's not going into a sovereign wealth fund. It's being spent. Where does that go? It goes to inflation. It leads to devaluation, etc., etc. So you know, that's where that's coming from, in my opinion. Also, they have the cheapest gasoline in the world. So what do? They waste it. Air quality, you know, it's just like Tehran, let me tell you. It's just probably, except Tehran is about 3 times more expensive than Venezuela. But where that has to go, in my view, back to my point, they should put the prices up to the global price, compensate the population with, you know, gasoline currency, you know, or basically carbon fuel currency, because that cannot inflate in price. That is backed by the intrinsic value of energy, Max.
All right, Chris Cook, thanks so much for being on the Keiser Report.
My pleasure, Max.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank my guest, Chris Cook. If you'd like to contact us, you can email us at keiserreport@rttv.ru or tweet us at Keiser Report. Until next time, Max Keiser saying bye, y'all.